Home First Finance. Despite a strong loan growth, the net interest margins actually declined sharply year on year for Home First Finance, but it reported a robust disbursement which aided the AUM. So good disbursement, good AUM growth, but the NIMs declined sharply. To discuss more on this, Manoj Viswanathan, who is the MD and CEO of Home First Finance, joins us. Mr. Viswanathan, thanks a lot for joining in. First, let me talk about a little bit of the problem pockets, right? Because you've had a contraction in net interest margin and there are some hiccups in the asset quality as well. I mean, a minor rise of 5% is what we've seen in your gross NPAs this time. Any issues that you're facing with asset quality and what is the outlook going ahead?
So gross NPA, as you said, there's a 10 basis points increase from 1.7 to 1.8%. Sorry, I mean, the gross NPA has been stable at 1.7%. So we don't see any asset quality issue at all. I mean, if anything, the asset quality is only improving, quarter on quarter. And generally, the last quarter is always, better than previous quarters when you look at the entire financial year. So we don't see any asset quality issues at all.
Okay, so no asset quality issues at all. Let's talk about the growth then, right? What kind of disbursement growth and AUM growth are you looking at? Because the momentum has been very strong up until now. You've seen almost 30% growth in your disbursements in this quarter gone by. Is this something that you can replicate in Q4 as well? And overall, what's your outlook for both FY24 and 25?
Demand is quite strong on the ground. I mean, we're not seeing any let up in the demand or any softening of the demand. So, and if you see the quarter 4, the way it has started as well, it has been very good. So disbursements are quite strong. So as far as we are concerned, we are having a very positive outlook as far as FY25 is concerned. The rest of FY24 and FY25 as well. So we are looking to grow the book by at least 30% year on year.
Okay, 30% disbursement growth is what you're looking at by both in
AUM growth.
AUM growth, all right. Got it. On the margin front, there's been a little bit of pressure. What is the expectation as we move along? And also, what is the incremental cost of funds that we're seeing compared to what the average cost of funds is?
Cost of borrowing, the sharp increase happened, during last year. But last 2 quarters, there has been, marginal increases, about 10-20 basis points every quarter. So that is the reason you're seeing the NIM, coming down from the 6-ish range to about 5.7% last quarter. So from here on, we don't expect the cost of borrowing to move up too much. Maybe another 10 to 15 basis points is what we are thinking it will move up. So we should be able to hold the NIMs at these levels. And if there is, a reduction in cost of borrowing, maybe in the maybe second half of next year is what people are predicting. So then again, the NIMs should expand slightly.
Okay, so you're saying 5.7% the NIMs were. It's lower than both, quarter on quarter and year on year. So you're saying you'll be at this 5.7% level. You won't be able to get above 6% in Q4 or in FY25?
FY25 first half, I mean, till the time the cost of borrowing comes down, I think these NIMs will remain at these levels. If the cost of borrowing goes down, then, some of that will, come to the bottom line. So it might go up to about 5.7%. Maybe, it may go up from 5.7%.
Post the RBI ruling recently, has the bank borrowing been difficult for you and for companies like yours?
You are talking about the, the risk-weighted changes
Yes.
For loan against property, etc., right? So we are a fairly housing-focused company. I mean, 87% of our book is pure individual housing loans, which I think is the intent of that RBI has behind these statements. And because our loan against property exposure is very small, we have not been impacted at all, by these changes.
Okay, all right. We will leave it at that. Thanks a lot for joining in. Appreciate your thoughts here. That's Home First Finance talking about their business. There was a net interest margin contraction actually this time around, but otherwise things were fine. The AUM growth, the disbursement growth for the company has been pretty strong. There was a minor deterioration in asset quality, but nothing much to worry about. The disbursement growth will continue to be robust both in FY24 as well as in FY25 as well. They're looking at a 30% growth going forward. All right, that is Home First Finance. But